Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 30th of January 2020, so yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also, just before we jump in, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yep, feel free to visit us on jfdbank.com and click on the research tab right there on the top. So, and it will take you to our page. Like I said, I believe you can find something useful in there. But right now, let's jump into the charts. Now, the first one I want to touch on here is the DAX. Now, the German index. I've touched on this one in the beginning of this week, and basically what I was saying is that we would need to keep an eye carefully on the this medium-term upside support line taken from the lowest point of August. And as you can see, this is what happened. What I was also saying, that if we see a break of this upside line, for us to get a little bit more comfortable with the downside, ideally we would need to see a good drop below the 13,195 zone. But as you can see, we did have a false breakout, but never even got a 4-hour candle close below this. So basically that's kind of it kind of helped it pushed back the price kind of back above this upside line. And looking at the cash index right now, we can see that the price is again balancing just near, not far from this upside line, maybe just a little bit below this. I mean, looking at this particular situation here. Now, again, still for us the same idea remains. We would like to see a nice good strong move below the 13,195 zone. And in addition to that, if you want to be a little bit more on the cautious side, also keep your eyes on the 200 EMA here, because as you can see back here in the beginning of January, it acted as a very nice area of support together with the upside line. So this time we have a slightly different situation, a little bit different situation, where on one hand, yes, it is still trading above this 200 EMA, but if it would travel here, if it would travel here closer to this upside line, this would also already place kind of the price back below this upside line, and in a way kind of it could increase the chances of a further drift lower. But let's be very careful and patient. Let's wait for a nice good at least a 4-hour candle close below the 13,195 zone in order to consider the downside. But then keep your eyes on the 200 EMA here on the 4-hour chart, and if we get a nice drop below this as well, then, well, I mean, this is when we could start aiming for the lowest point, the current lowest point of January, near the 12,950 zone, or we could aim for the lowest point of December near the 12,886 zone. So for now, keep your eyes on this one. In case this, let's say, suddenly pushes back above the 13,400 territory. Now, this, and looking at this 4-hour chart, we would see that the rate would be placed back above all of its EMAs, and in a way this could increase the index's chances to drift further north. So that's why, guys, for now, of course, all eyes are on this area of support. Let me just actually put this highlighted territory right here, because that's what we're going to be focusing right now on. And if we get a nice drop below this, then yep, further declines are possible. But of course, let's be very careful for now. Brent oil. Now, I touched on this one as well this week. Basically, looking at this picture here right now, you can see that the area here near the 60.32 zone acted as a very nice area of resistance. You can see previously it acted as a support back here, back on the 20th of November, and also on the 29th of November and the 3rd of December. So you can see a nice rejection here near this line, and now we're seeing a drift lower. So for now, everything's kind of moving in line with the idea that I talked about yesterday in my Traders Espresso. For now, the main target is, of course, this recent low near the 58.50 territory, which, if broken, well, I mean, this would confirm a forthcoming lower low, and it could open the path towards much lower areas. Now, don't get me wrong, we do have some obstacles here in between, because for us, the main target right now could be around the 56.17 zone, roughly around there, which is the lowest point of October. But before that, it could meet, of course, this level right here near the 57.36, and then, yep, if that fails to withhold, then yeah, further declines are possible. But again, long story short, for now we're more bearish than bullish on this one. For us to get a little bit more excited about the upside, well, ideally we would like to see a push not only above this steep downside line, but also a push above the 63 mark. Now, don't get me wrong, I might revise this later on, maybe push it to this one right here, to 62.44-45 zone. But again, for now, that's the little bit more comfortable area for us, because at this point in time, until kind of the 200 EMA is still traveling towards this area, that's why this one for us is a little bit more attractive than the slightly lower levels. So for now, keep your eyes on this one. But as I said, we're more bearish than bullish, especially if it drops below the current low, the recent low near the 58.50. Silver. So silver, I touched on this one as well, and yesterday my traders tea time. Oh, sorry, yeah. Yes, tea time and espresso as well. There we go. No, sorry. On tea time, I talked about gold. There we go. Got confused. So yesterday morning, I talked about this one. Basically, what I was saying that, in a way, keep your eyes on some of these key important levels that we have recently broken. So basically, given the fact that it traveled lower, it found some support around the 17.35 mark, and then kind of drifted back to the upside. Now, again, for now, as long as it remains below this barrier right here, below the 17.65, we will class this as a temporary correction, because again, the uncertainty around the equity markets as well, that's what's also kind of fueling this one right now. So we are seeing the cash indices sliding a little bit right now at this point in time. So we can see that the commodities are picking up in interest and buying interest, and of course, the big question here is, can this be maintained if we see a nice push, like I said, back above the 17.65 zone, and maybe even better, a push above the 200 EMA here on the 4-hour chart, which is near the 17.73 level currently. Then yes, we will consider a possible move higher here again, maybe towards the 18.15. But as I've mentioned yesterday, this level here, the 18.15 level, is the more comfortable area for us to, after which we could consider higher areas. So for now, be very careful. You can see that the 17.65 zone, it could be acting as a nice area of resistance. For now, it is doing that. So let's see if it can hold. If it can, then yep, this could come in line with the scenario that I talked about yesterday for a possible drift back to the downside. So also keep your eyes on the equity markets as well, because like I said, if those start sliding, well, I mean, we could see a pickup in the in gold and silver. So keep your eyes on this one. Ethereum. Now, I talked about this one in my traders tea time yesterday, and basically what I was saying, guys, to keep an eye on this 179 level. Now, you can see that the crypto tested perfectly this area, and now it retraced back down. Of course, for now, everything still is somewhat positive, because we are trading still above these two tentative, short-term tentative upside lines. One is taken from the low of the 2nd of January, or 3rd of January, I do apologize, and the other one is taken from the low of the 10th of January. So for now, like I said, they're both tentative. We're still going to keep an eye on them just in case we see a drift lower, and then let's say the price rebounds somewhere from here and pushes back to the upside. But of course, the main target for us, or should I say the main level that we're keeping an eye on, is of course this 179 zone, because if it fails to withhold the bulls, then well, a nice good break would confirm a forthcoming higher high, and yep, we could start targeting the 186 territory, or even going further north towards, not this one, there. One moment, just guys, this keeps running away from me. So, or we could target this little area near the 194.70 zone, so which is the high of the 6th of November. Again, but for now, all eyes are on this territory until as long as it remains here in this little territory. Yes, we will remain somewhat positive, but probably we'll just wait for a break above the 179 zone just to be on the safe side. In terms of the downside, now if one of these upside lines breaks, yes, of course, it increases the chances of a drift further south. The only problem is, of course, some of these areas of support here, like the 155 zone, or maybe just slightly above that, the 157.40. Again, we would prefer to see a drop below this support area here, because in a way, if let's say the crypto drifts lower, breaks one of these upside lines and continues to, or should I say, breaks all of these upside lines and continues to move south, it might find support here, and if it does find support here, it may rebound and push back to the upside, and this way we would be having ourselves a nice range here. So yeah, guys, something to consider, something to keep in mind. So that's why for us to get a little bit more comfortable with deeper extensions to the downside, a drop below the 155 level would be required. AUDCAD. Now, I talked about this one in the beginning of this week, and specifically on the 28th. So basically, what I was saying that, guys, we need to see, it is a very interesting setup right now here, but we need to see a nice, good, clear drop, and ideally at least a close of a 4-hour candle below this area of support near the 0.8888 and the 0.8896 levels. So or in a way, you could just keep an eye on the 0.8888, because as you can see, for now, all this territory kind of continues to hold and kind of continues to keep the bulls afloat here. But if we get a nice 4-hour candle close, at least below this area, well, then, I mean, further declines are possible. Don't get me wrong, we're not going to drag this one too much to the downside. First, we'll aim just for the low of the 16th of October near the 0.8875, and then we will aim for the lowest point of October near the 0.8830. So again, but for that, we need to see a nice, good, at least close of a 4-hour candle below the 0.8888 zone. In terms of the upside, we will consider some extensions to the upside if we get a pushback above the 0.8925 zone. Of course, we'll be very careful and cautious, because there are a bunch of obstacles for this pair here. I mean, especially all these EMAs, the 21, the 50, the 100, and the 200. So, but for those who want to be a little more on the cautious side, just probably wait for a push above the 0.90 zone and only then target the upside. GBPNZD. Now, it's working out nicely. So I talked about this one in the beginning of this week as well, and basically what I was saying here was that in a way we are aiming for that psychological 2 zone. We've managed to reach that area here today, this morning, and we slightly overshot the psychological 2 zone, but to be honest, we had a perfect hit of this territory that I talked about previously, the 2.0005 zone, which was the high of the 18th of December. So basically, let's get rid of this arrow here, or actually, let's recycle it. Now, in a way, don't get me wrong, we kind of had a nice test of this psychological 2 zone. This is where the pair is currently balancing at. It also, from the short-term perspective, it is still trading above the short-term short-term upside support line here, taken from the low of the 26th of December. In a way, for now, of course, we would like to continue targeting the upside, and we will do that. But again, let's not forget, maybe we could see a bit of a small correction or some sort of, again, as you can see, we did have some corrections here, and then this area here, the 1.9840 zone, kind of acted as a somewhat I would say is a good area of support. But well, we did have a few breaks here, like for example here in the end of last week. But the bulls kind of quickly pushed it back up here, and now we're testing that psychological 2 zone. If we get a nice break above this, then yes, we will continue targeting the upside. Our next potential level to consider is going to be the area of resistance to consider will be around here near the 2.014645 zone, roughly around there, guys. Basically, you can see that that's marked by an intraday swing low of the 13th of December and by an intraday swing high of the 17th of December. So, or actually, that's near the highs of the 17th of December. There we go. So initially, like I said, we'll go step by step. We'll target this area, but only if we get a nice push above this barrier first. So yep, guys, keep your eyes on this one. It could be quite interesting, but for now, we'll be very careful. Now, in terms of the downside, and taking into account the recent kind of activity here, so we can adjust a few levels here, a few potential areas of support. So of course this becomes a nice interesting area of support, the low of the 24th of January near the 1.9757. We will we'll consider that move towards that area if we get a drop below the 1.9861 zone here. So even then, I mean, this move lower could still be seen as a temporary correction, because we would still be above this short-term upside line. But nevertheless, we'll take that, and yep, we'll if we get a drop below the 1.9861, we will aim for the 1.9757, and or even towards this, we'll aim for this upside support line. So for now, be very careful. Wait. Probably don't rush into this yet. Again, looking at this picture here, we are near this psychological 2 barrier, so we need to see a nice good clear break first before acting on this one. And even then, well, I cannot stress the importance of having stop loss in place, because don't get me wrong, I mean, and you've probably seen it yourself, where you have a nice good strong move above a certain key barrier, but then at the end of the day, the whole candle, the whole daily candle moves back below this. So basically we get ourselves a nice false breakout, and a lot of people get stopped out, and especially if you don't have a nice good stop loss. So let's say if we get a nice push above this 2 level, we start seeing a further drift north. Well, I mean, I would probably suggest to put a stop loss just to break even, just in case this suddenly reverses back down. Again, I know it depends on your preferences, but in general, kind of have a stop loss what's more comfortable for you. And yep, guys, keep your eyes on this on the price action. USDCHF, now very quickly on this, I talked about this one yesterday. The barrier here, the 0.976263 zone, held nicely. I talked about this one yesterday, and what I was saying as well, that if it holds, we could see a nice drift back to the downside, and if it starts moving below the this little area of support here near the 0.9678 zone, then, well, I mean, this increases the chances of a test of this area of support here between the 0.9623 and the 0.9641. This way we would be getting ourselves a nice wide range here, and which we'll keep an eye on, we'll keep on monitoring closely, because at this point, I mean, if now basically the reason, because we're afraid of this one being caught in this little range, or actually wide range, we will wait for a clear breakthrough one of these areas here, and ideally we would like to see at least a 4-hour candle close outside of the area before kind of considering a further directional move. EURUSD, very quickly on this one, and I'll wrap it up on this one. Now, yesterday, I talked about this one, and basically I was telling you guys to keep a close eye on not only on the 1.10, the psychological 1.10 zone, but also on the 1.0980 territory, which is acted as a fantastic area of support here back in on the 29th of November, or in other words, is the lowest point of November. So we did drift below the 1.10, but didn't quite reach the 1.0980, and you can see that the pair reversed back to the upside. This is for now kind of playing nicely. It's going in line with the idea of a potential correction back towards this very short-term downside resistance line taken from the high of the 16th of January. So yep, for now we're gonna we will consider this idea first, where we could see a drift towards this downside line, and if it holds, then we could see another round of selling towards this 1.0980 territory. If this downside line breaks, not all is lost for the bulls, for the bears, because yes, the bulls could drive this one higher, could push it maybe back above the 1.1066 zone, but we do have another area of resistance, potential area of resistance near this downside line here, taken from the high of the 31st of December. So in a way, another chance for the bears to step in could be around here, but that's in the scenario if this little very short-term downside line breaks. And of course, if this other downside line, the one taken from the 31st of December, gets broken, well, I mean, this could be opening the path towards higher levels. But again, for now, guys, be very careful. Have your stop losses in place, and let's see how this is going to play out. For now, I hope you found it useful. Thank you very much for sticking around and watching it till the end. And if you want to join me later on, as always, at my traders tea time, that's 14:15 GMT. For now, I hope you have a beautiful trading day, guys. Stay safe, and yep, keep your eyes on the price action. Thank you very much, and bye-bye.